Imagine waking up tomorrow and realizing your bank just paid you. Yes, paid you for keeping your money there. Sounds strange, right? Most people are used to banks quietly earning from their savings, not the other way around. But what if I told you that with the right kind of account, your money could actually start working for you, growing faster than you thought possible? That's exactly what a high-yield savings account does. And today, I'll show you exactly how to pick one that gives you the most bang for your buck. Number 1. What exactly is a high-yield savings account? Let's start simple. A high-yield savings account is just like a regular savings account, but it pays you much higher interest. Think of it as the VIP version of a normal savings account. If your traditional bank gives you around 0.01% interest, a high-yield savings account could offer anywhere from 4 to 5% annual percentage yield, depending on the market. That's hundreds of times more than what old-school banks give. Here's a quick example. If you put $10,000 in a traditional savings account earning 0.01%, you'd make about $1 in a year. But with a high-yield savings account offering 4%, you'd earn around $400 in the same time, without lifting a finger. That's the difference between your money sitting idle and your money quietly growing every single day. Number 2. Why are high-yield accounts so generous? It's not because they're feeling extra nice. It's actually a business strategy. Most high-yield savings accounts are offered by online banks. These banks don't have the same costs as traditional banks. No fancy branches, no tellers, no massive buildings. That means they can afford to share more of their profits with you in the form of higher interest rates. Think of it this way. A traditional bank is like a restaurant with expensive decor and waiters everywhere. You're paying for that overhead. But an online bank is like a food truck, low cost, efficient, and often just as good, if not better. So yes, they can afford to pay you more because they're saving more themselves. Number 3. How do you know if it's the right account for you? Ask yourself this. Do you want your money to grow faster while still being easily accessible? If your answer is yes, then a high-yield savings account could be perfect for you. It's great for emergency funds, vacation savings, or short-term financial goals. Basically anything you don't want to invest but still want to grow safely. These accounts are insured by the Federal Deposit Insurance Corporation, FDIC. Up to $250,000 per depositor per bank. So your money is protected even if the bank fails. For example, if your online bank suddenly went out of business, the FDIC would make sure you get your money back, up to that limit. That's peace of mind with profit potential. Number 4. Compare the annual percentage yield, APY. The APY is the number that tells you exactly how much your money will earn in 1 year, including the effect of compounding. If one bank offers 4.2% and another offers 3.8%, that small difference can add up to hundreds or even thousands of dollars over time. Let's say you deposit $20,000. At 3.8%, after 5 years, you'd have around $24,100. But at 4.2%, you'd have about $24,600. That's an extra $500 just for picking the right account. So don't rush. Shop around. The top online banks often change their rates, so keep an eye on them. Number 5. Watch out for hidden fees. Some banks love playing hide and seek with your money. Look carefully for account maintenance fees, minimum balance requirements, or transaction limits. Imagine finding an account that promises 4% APY, but then charges you a $10 monthly fee if your balance dips below $1,000. That fee could erase all your interest earnings. A good high-yield savings account should have 0 monthly fees and no minimum balance requirements. That way, every cent you earn stays yours. Number 6. Check how easy it is to access your money. Some high-yield accounts are so focused on savings that they make withdrawals difficult. You'll want to check how you can transfer your money via an app, website, or linked checking account. Most online banks make this easy, but some take a few business days to move your money. For example, let's say your car breaks down unexpectedly and you need quick cash for repairs. You don't want to wait 5 days to transfer your savings. So when comparing accounts, check how long transfers take and if they allow instant transfers or same-day withdrawals. Number 7. Check the bank's reputation and safety. This might sound boring, but it's crucial. Make sure the bank is FDIC insured. That's your safety net. You can check this directly on the FDIC website. Also, read reviews. How do customers rate their experience with the bank? Do they complain about slow transfers, hidden fees, or poor customer service? A high APY is great, but not if it comes with frustration and bad support. Look for online banks with transparent policies, good ratings, and a history of reliability. Number 8. Look for user-friendly tools and apps. We live in a world where we manage almost everything on our phones, so your bank should make it just as easy. Many high-yield savings accounts come with sleek mobile apps that show your balance, growth, and transaction history at a glance. Some even offer automatic savings tools, like rounding up your purchases and saving the spare change. For example, if you buy a coffee for $3.60, the app might round it up to $4 and transfer that extra 40 cents into your savings automatically. Over time, those small bits add up fast. A great app makes saving feel effortless and even fun. Number 9. Understand how often interest compounds. Here's a secret that many beginners overlook. How often your interest compounds can make a real difference. Some banks compound interest daily, while others do it monthly. Let's say you earn 4% interest. If your account compounds daily, you'll earn slightly more than if it compounds monthly, because you're earning interest on your interest more often. It might seem tiny, but over years, that small detail adds up. So when comparing accounts, always check for daily compounding interest. That's your best friend in growing money faster. Number 10. Keep an eye on rate changes. Here's the thing. Interest rates don't stay the same forever. Banks can raise or lower their APYs anytime based on the economy or Federal Reserve decisions. So don't just pick an account and forget about it. Review your rate every few months. If another bank starts offering better returns, you can always transfer your money. Think of it like moving your plants to a sunnier window. You're giving your money a better environment to grow. Number 11. Use it strategically. A high-yield savings account isn't just about earning interest. It's about financial strategy. Use it to separate your emergency fund from your spending account. That way, you're not tempted to touch it for everyday expenses. For example, let's say you set aside 6 months of living expenses, maybe $12,000, in your high-yield savings account. You can rest easy knowing that even if you lose your job, your savings will grow a bit while it sits there, and you'll have quick access if you need it. You can also use it to save for goals like a wedding, vacation, or new car, without risking your money in volatile investments. It's safe growth, not gambling. Number 12. Bonus tip: don't confuse it with a money market account. This is a common beginner mistake. Money market accounts can look similar, but they often require higher minimum balances and may have check writing features. If you're just starting out and want simplicity, go with a high-yield savings account. It's easier to open, manage, and move money in and out of. Number 13. Look for promotional offers and welcome bonuses. Some banks run special promotions to attract new customers. They might offer a cash bonus if you deposit a certain amount within the first month or keep your money in the account for a set time. For example, a bank might offer a $200 bonus if you deposit $10,000 and leave it untouched for 90 days. That's free money on top of your high interest earnings. Always read the fine print though. Some promotions require direct deposits or limit withdrawals during the offer period. If the conditions are simple, it can be an easy way to boost your savings right from the start. Number 14. Understand the impact of inflation. Even a high-yield savings account can't always keep up with inflation. If inflation is 3% and your account pays 4%, your real return is about 1%. That's still better than a regular account paying 0.01%. But it's important to know that your money's purchasing power grows slowly. The point is, high-yield savings accounts protect your money from losing too much value, but they're not meant to make you rich. They're for stability, security, and short-term growth. Number 15. Check the deposit and withdrawal limits. Some banks set daily or monthly limits on how much you can transfer or withdraw. For instance, you might only be able to withdraw up to $10,000 per day or make 6 withdrawals per month before facing a fee. If you plan to move money often, look for accounts with flexible transfer policies. You want an account that fits your lifestyle, not one that punishes you for using your own money. Number 16. Understand the link between checking and savings accounts. Many online banks let you link a checking account directly to your high-yield savings account. This connection makes transferring money smooth and fast. If you already have a checking account with a particular bank, check if opening a savings account there gives you added benefits, like faster transfers or loyalty bonuses. For example, some banks offer an extra 0.1% APY boost if you keep both checking and savings with them. It's a small detail that can lead to bigger returns over time. Number 17. Verify how interest is paid out. Different banks credit your interest earnings differently. Some add it to your account monthly, while others do it quarterly. This matters because the sooner interest is added, the sooner it can start earning more interest through compounding. If two accounts offer the same APY, the one that pays monthly might grow slightly faster than the one that pays quarterly. Small differences like that can quietly boost your overall returns. Number 18. Know the bank's customer service options. Even if everything is online, you want a bank that's easy to reach when something goes wrong. Check if they offer 24/7 chat support, phone assistance, or quick email responses. Try sending them a simple question before opening an account. See how long they take to reply and how helpful they are. Good service can save you stress and time later. It's like buying a car. You don't just look at the price, you also want a reliable company behind it. Number 19. Check for account integration options. If you use budgeting apps like Mint or you need a budget, check if the high-yield savings account can connect with them. This lets you track your savings automatically and monitor progress without switching apps. Automation keeps your financial life organized and prevents you from losing track of your money. When your accounts work together, you can see your complete financial picture at a glance. Number 20. Don't forget about taxes on interest earned. Many beginners are surprised to learn that the interest you earn is taxable income. At the end of the year, your bank will usually send you a form showing how much interest you made. You'll need to report that amount when you file your taxes. It's not a huge amount for most people, but it's good to plan for it, especially if your balance is large or your interest rate is high. That way, there are no surprises at tax time. Number 21. Choose banks that make transferring easy. Some banks make it frustrating to move money in and out of their system. A good high-yield savings account should let you link multiple external bank accounts. That means you can easily transfer money from your paycheck account or move it to another bank when a better rate comes along. Flexibility is key. Your savings should never feel trapped. Number 22. Look for automatic deposit options. Setting up automatic transfers is one of the smartest ways to grow your savings effortlessly. Even small amounts add up over time. For example, setting an automatic transfer of just $50 every week turns into $2,600 a year, without you even thinking about it. The beauty of automation is that it builds discipline without willpower. You save first, spend later, and your account grows quietly in the background. Number 23. Watch for account freezes or dormancy rules. If you leave your savings untouched for too long, some banks mark the account as inactive. After a certain period, often 1 or 2 years, they might freeze it or even send the funds to the state as unclaimed property. To avoid this, make at least one small deposit or withdrawal each year. That simple habit keeps your account active and avoids unnecessary hassles. So let's bring it all together. A high-yield savings account is one of the simplest yet most powerful financial tools you can use. It's safe, it's flexible, and it helps your money grow while you sleep. But picking the right one means doing a little homework, comparing APYs, checking for fees, verifying FDIC insurance, and making sure you can access your funds easily. If you do that, you'll not only protect your savings, but make them work harder for you. Now, here's a question for you. If your bank offered you 0.01% interest while another offered you 4%, would you still stay with your old bank out of habit? Or would you finally make your money earn what it deserves? Let me know your thoughts in the comments below.